What's up, traders? Hope you're having a fine weekend and an excellent evening. It's January the 30th, 2022. Let's do our weekend homework, looking for the technical levels that I'm going to be looking for this week to see as potential trading opportunities on stocks, the indexes, cryptocurrency, anything that trades. Let's take a look at it. So we're going to start with stocks, and then we're going to look at crypto. We're going to look at oil, gold, some individual stocks that are indicative of some of the major movers in the market today, as well as the dollar. And then we're going to talk about the Bitcoin dominance to see if it's going to tell us if we are going to get an alt season, an altcoin season that I've heard some people talk about over the last week. So, first thing we're going to look at is the stock market. This is the E-mini futures. I really like this to give a good gauge of what the stock market is doing as a whole. Not only is it the most liquid tradable product, but it's going to look a lot like the SPY as a whole. So on the daily right here, since about 2 weeks ago, we entered a bearish trend. And what this looks like on the weekly is that we have started trying to pull back to the cloud here. And that was actually the thing that I was looking for last weekend, was price to come down, maybe touch the cloud. Instead, what it ended up doing was coming down to a key level, which really needs to be marked off. There was a all-time high back in May of 2021. It also matched up with this July low where price had an all-time high, came back around, broke above it, held it. That's the support turned into resistance right there, about 423 on the SPY is what it would be. And if you look this week, very interesting price action this week. These ranges are huge. This looks like it is a consolidation, but these ranges had a lot of tradable opportunities. The FOMC was up here. This was the V bottom that we seem to have made, and we never really came back down to test it this week. That's telling me that, well, maybe on the bullish side. I think that we're going to possibly come back to retrace this bearish move, because every other year you get a minus 10% pullback in the stock market, represented by the S&P. What that would mean, and we got a 12% here, and so that's where the bottom is. This could have been it. I know that at the bottom here, or the bottom this week, there's a lot of FUD. There's a lot of people trying to make the case that this is not over, that there's more coming, because that gets lots of clicks. But if you look at it from a dispassionate statistical point of view, this was probably the move that we didn't get last year, we got this year. Now what I want to see this do is I want to see it come back to the halfway point of the total down move, which is going to put us right around the SPY 450, or in this case, the futures 4,500 range. If we can get price to come back up to this level, that's the point that we need to look and see what happens. Does it break above it? Does it hold it to go down? The way I'm going to look for that is individual stocks, not just Apple or whatever's dominating the index, but let's see how some of these trades play out at this level if and when we do hit it. And then that's going to give you some clues to where this market's going to go from then on. I think I'm operating on the thesis that this week we're going to come back up to retest this level, and then we'll see what happens. The Nasdaq, well, it's pretty much the same story. So I would be looking for its retracement to come back to the 15,181 level. So there's some nice inflection there, this low that we made back here on the 10th of January. So really like that level as our potential for the Nasdaq. So that's what I'm going to be looking for. We could very well come back down to retest the bottom. If that happens, we'll trade it. But that right now is what I'm looking for to happen. In Bitcoin, still in a bearish trend. And the inflection point really hasn't changed. The only way that I would actually consider this to be bullish is if we can get back up into the 44,000 range, basically get on this other side of the daily cloud. On the weekly, Where we paused over the last 2 weeks was what I was looking for. I was looking for this level, which was the retracement all the way back down to the COVID low, right here around the 3,600. And sure enough, we seem to be getting a relief rally. Where will this relief rally go? I think we may actually come back up to make this into a much bigger consolidation pattern. But I don't want people to be going and FOMOing in just yet. I think it's more likely to be a head and shoulders pattern, meaning we'll find some kind of a high, maybe in the 50s, and then we may enter into another sustained bearish leg. I know it's not what most people want to hear, but this thing should have gone. That's been my thesis since October, November. When we made these highs up here, price should have had the optimism. People should have been trading it up to the 300, 400, $800,000 Bitcoin that whatever the Twitter people that are most shared said it was going to be. Didn't happen. Now people are scared. You're not going to see a lot more skepticism as this thing rises. That's just psychology. Ethereum, same thing, pulled back down to its retracement level, and this is where it's hanging out. So I would like for everyone to see a relief rally, to maybe give them a chance to reposition themselves at a better price, but I still remain bearish, full disclosure. Gold. Gold is something that's always a popular meme. The people that believe it's the only real true money, they want to put all their wealth into it because they think the economy is going to crash. Let's address that for a second. Went to some restaurants this weekend. Maybe this is just anecdotal, but people are out spending their money. Traffic, at least in my area, Atlanta, is back to pre-pandemic levels. There's nothing really bad going on in the economy right now. Nothing that's going to give us that 30%, 40% crash like we had COVID or like we had 2008. Things are pretty okay. And so you really need a fundamental driver to crash the market to something that I think a lot of people assume is going to happen every time we take a little dip. It's just not there. I could be wrong. We could go to war with Ukraine, but I don't think that's very likely. I really, really don't. I think this was the 10% move. Back to gold. What's ended up happening here is it's established and kept a consolidation for pretty much the better part of a year. And as I said in my letter to subscribers, I don't see gold appreciating more than the rate of inflation over the next year, unless you can get a major trend to start. Gold has this tendency to trend and consolidate. The last major consolidation was from the period of about 2013 to 2019, where it just kind of hung around the 1200 to 1400 range. Now we're inside of a consolidation like this around the 800 range. Price could do one of two things. It could break out of the consolidation higher, as I'm sure a lot of gold bugs want, or it could break lower. And it's done both in history. You can just go back and look on the chart. Price tends to find an equilibrium on gold, and then you break out to another level of consolidation. So this consolidation could last for years. I would be looking only to get interested in it if it breaks either the high side or the low side of the consolidation. So if we can get up into maybe 2000 or down into the 1600s, then you start to get into an interesting scenario. But until then, I just don't see this going anywhere. Oil. Oil, as we talked about last week, continues to go up. I really think in the long term, what oil is trying to do is get back into this range of equilibrium that it had in the early part of the 2000 teens, really around the $100 a barrel mark. I think that's what it's shooting for right now. I think we had some interviews with the CEOs of maybe Exxon Mobil that said, now's the time to buy their stock. I am long Exxon Mobil, but Exxon Mobil has earnings coming up this week. So does other major oil producers like ConocoPhillips, which I also have. The options that I am in on ExxonMobil, they're going to be cut day before earnings, no matter what, because otherwise you're going to get a major volatility crush. It could go up further, but with a trend like this that really started back in December, at some point you got to take profits. And so I think the risk reward to the upside of oil is pretty much gone, but I do think it has a little more to go. Dollar. US dollar, last week we talked about how if you look on the daily, we did a pullback here at the middle of January, back to the Ichimoku cloud here. Now it's come up to retest and break the high. That makes total sense because if we look on the weekly, it's also breaking out to the high side. A bullish trend has been going on in the daily on the dollar, and now on the weekly, it is confirmed the dollar could go higher. That means that, well, it basically means that the market is pricing in those increased interest rates, which is bullish for the price of the dollar. So, a few of the stocks this week. Apple, which had earnings and actually responded well to it. I think I talked about this in some other videos. This was a very good 50% retracement to this level right here. And I do expect this to come up, retest the high, retest that $3 trillion market cap that it reversed from earlier. Tesla, as much as I hate to admit it, this is done. Tesla has entered into a confirmed bearish trend. It could recover, but if you're smart, if you're minding your risk, you have to acknowledge that it failed to make a higher high at the beginning of the year, and now it's trending to the downside. And the last thing I want to talk about is the Bitcoin dominance. This is BTC.D on TradingView. I've seen some articles, people talking about how we could be going into an alt season. And what an alt season means to cryptocurrency traders is that the altcoins, to be kind, are going to actually have their day. They're going to outperform Bitcoin and things like that. I don't think the people that believe this really understand how bearish trends in cryptocurrency have developed in the past. Bitcoin actually is a safe haven asset. When cryptocurrencies begin to trend downward, people start to look to invest more in Bitcoin, convert their more volatile coins to Bitcoin. And Bitcoin actually has some of the lowest volatility during these periods. What you have going on right here with the Bitcoin dominance is since the middle of January, the dominance, which had been trending down, in other words, the amount of market cap that is invested in Bitcoin versus all the other currencies combined, it has been trending down. It got down to a low of about 39%, and now it's coming back up. If we're just using technical analysis on this, this could actually trend higher because if cryptocurrency as a whole, if the market begins to trend lower, more and more people are going to be piling into Bitcoin. Bitcoin may still go down, but it will go down less than other cryptocurrencies. And you're starting to see this in the Bitcoin market cap dominance. So there's a very good chance that we could trend to the upside here. What does that mean for people that are trading? I really think that you need to look into hedging some of your positions. If you don't want to short individual things, if you don't want to sell your holdings, look at some currency crosses. For instance, one of the most liquid cryptocurrency crosses would, of course, be Ethereum Bitcoin. And if the market cap dominance trends, this could be a very good product to short, betting on not really either one of these going up or down, but basically the relative value. This has entered into a bearish trend. If we look at this on the weekly, it has been trending bullish, but this could come back down to maybe the 0.06 level. So this would be a product that I would encourage people to start looking at. The currency crosses, again, Litecoin versus Bitcoin. If this is going down, that means that people are valuing Bitcoin more than Litecoin. Some of the others, Monero, also been trending down. You can find a lot of things here. I think the only thing that someone has mentioned to me has been actually trending to the upside is maybe one of the meme coins. Well, even Doge is losing its value relative to Bitcoin. So as the market, as the crypto market has a lot of bearish pressure, more and more people are going to be piling into Bitcoin as the safe haven asset, not the altcoins. So alt season, unless it does a snap reversal from the bottom, and I'm totally wrong, I don't think it's going to happen. I think the opposite is going to happen. If you are heavily invested in altcoins, you need to really consider your position weighting if you want to stay long cryptocurrency. So that's going to do it for this week. I do expect this to be an interesting week, as it has been. As a final note, there's a lot of volatility in pretty much every asset class, the stock market included. This month has been a little scary if you've been long, but if you're a trader, this is the kind of action that you want. As I was saying before on the S&P futures, even though this is a nasty consolidation, you have movements in here, in movements of 1-2% are basically 100-point moves in the scope of a morning, 100-point moves in the scope of the afternoon. When you get into the dog days of summer, you won't see 100 points in a month. Sometimes. Take advantage of this volatility. Get back on the horse and trade, and get back your losses by playing smart with good setups. That's my message to people going into this week. Trade wisely. We'll see you in the next videos.